Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to have a look at the bigger picture view by revisiting the old 4-year cycle and see whether that's still relevant today as it was over the last 4 years. I'll also be looking at the shorter term movements in the price here to see exactly where we are and where we have the highest probability of getting to in the next few days and weeks. But before all that, just the usual polite reminder, please remember everything in my videos is for educational purposes only. Nothing should be taken as financial advice. It's always very sensible to do the widest research possible before you make any major decisions. So with that out of the way, I'm going to give you a general comment about how I approach these markets and what my mindset is on these. If you've been watching my videos for the last 2 years or so, you'll know that I have a favorite phrase called fluid and flexible, because for me, I like to remain always in the neutral gear. And I like to let the price action determine my bias in the market. And for me, I'm always prepared to change my bias to the upside or the downside, because the market also changes its bias to the upside and downside. It seems rather ludicrous that when the market has changed its bias to the upside, that you remain in a bearish mode, because that would make very bad decisions. And for me, it's not about being right or wrong. For me, it's being on the right side of the trend. And that is a sensible thing to do in a changing market. And we must always try to be honest with ourselves, because if you start kidding yourself by being stubborn that this market is going down when it's quite clearly going up, then you're going to end up making very bad emotional decisions. And that's why I say many times in my videos that we must always remain emotionally intelligent by acting according to what the market is telling us. And every day the market gives us different information, and therefore it adds to our knowledge, and therefore by adding to our knowledge we must always then adjust accordingly in our mindset towards the market. So over the last 3 months, as you know, I've always been mentioning the fact that the dominant trend in this market is to the downside. Therefore for me, the focus should always be to protect the downside, because this downside continuation is much more probable than the upside, simply because there's nothing in the charts here telling us that the upside is more prevalent than the downside, because this dominant trend is quite clearly to the downside. And if you're an investor or a trader, your number one focus should always be to protect your funds, because if you don't have the funds, you can't invest or trade. So currently, whatever your bias is and whatever your belief is in Bitcoin, and my belief is that in the long term, Bitcoin will go towards the $150, $250, $300, $400,000 mark. But in the shorter term, we can see that the price is telling us something. And the price action currently, as I say, is telling us that this is the dominant trend to the downside. And we've had a relief rally, as I've mentioned in the last few videos now. And as neutral people, we must assume that until you see a sign of reversal, and I've said over the last many videos now that the sign of reversal will be once we get above this $46,000 mark. Once we get above there, then we create a higher high from here, and then the reversal will be confirmed here. But until then, we must assume the downside risk. And many people ask me, what's happened to the 4-year cycle? Are we still in an extended cycle, or have we come to the end of that 4-year cycle? Well, I'm going to show you some facts in the charts, and you can make up your own mind on that. I'm going to start off on the monthly chart. And on the chart, I've got the 8 EMA clearly marked with the blue line here. And what is alarming on the monthly chart is that, as I'll show you, that in all of the previous 2 bull markets that we've had, we never fell below the 8 EMA. And after the $64,000 markup that we had here, we fell below it with this candle and the next one there. So we had 2 months closes below the 8 EMA. Whilst we found support back up above it and then had a rally all the way up to the $69,000 mark, unfortunately, we've now fallen below it. We've already had 2 closes here in December and in January. And now in the current month here, we're about to actually close below the 8 EMA again, unless we can get above $44,000 by the end of evening, UK time, midnight tonight. So it looks unlikely, but anything is possible with Bitcoin, of course. So what we will have, if it remains below the 8 EMA, is 3 months below the 8 EMA. And the reason why this is significant is because in a bull market, the market does not fall below the 8 EMA, let alone twice, one here and currently here. Because if we look historically, this was the 20,000 previous all-time high in December 2017. And as you can see, once we went above this 8 EMA here, back in 2015, in October 2015, we had a run up all the way with a blow off top at the 20,000. And at no stage did we actually fall below it. And the only time we fell below the 8 EMA was a few months after the topping. So that was basically part of the bear market for 1 year down here, which is significant. Previous to that, in November 2013 was the first bull market cycle. And once again here, if you look at the time before it, the price remained above the 8 EMA when it broke out here back in June 2012. And at no point did we close below this until the blow off top. And the only time it went below it was after the blow off top, the end of the cycle. As you can see from here, that's when we fell down. And then we had a 1 year bear market. So this would suggest that since the COVID situation back in 2020, we had the run up, we didn't fall below it until we topped out first time at 64,000. And we've now topped out again at 69,000. This would suggest that we're now in the middle of a 1 year bear market that's going to take us down to a certain level here, which I'll go through in a minute, of where the possible support levels are if we assume that this is a bear market that we're in here. But if we have a look at the previous cycles, what we did have was a well-defined support level after the blow off top. So we came down to this level here, came back again and found support before we moved to the upside. Similarly, at the end of the second cycle in December 2017, after the blow off top, we created this support line here, which we bounced off before we went back up into the next bull market. And currently, we're doing a very similar thing here. We topped out at 64 here, and this was the bump and run line that I created many videos ago. And it seems that we came up, found resistance, but once we get above that, we now have been finding support on it. And it appears that this is the line that we're going to be bouncing off if indeed we're in a bear market here. And the question is, how far low can we get here? If this is the trajectory of a bear market for 12 months, which would take it to the end of this year. So in all intents and purposes, what this monthly chart is telling us and the 8 EMA is telling us is that we have actually come to the end of the cycle, the 4-year cycle, which was supposed to be between September and December 2021. And we seem to have topped out at two places, back in May 2021 and then in November 2021. And we've now created a double top, which would be confirmed when we break the $28,000 mark here. I'm now going to move one time frame down to the weekly chart, and I want to show you something very important to determine the level that we will find support if indeed we're in a bear market, so that we can find a level at which we can all find support and to get back on board the Bitcoin train. So this was the end of the first cycle, and at the end of this bear market for 1 year, we found support at the 200 weekly simple moving average here, which is the green line here. From there, we bounced all the way back to create another high at the end of the next cycle at 20,000, and that bear market for 1 year ended with a support exactly at the 200 simple moving average. And currently, we've been in this bull market here, which, if this is the correct assessment with a double top here, then with a high degree of probability, if that narrative plays out, then more than likely we're going to come back down and find support at this green line at the 200 simple moving average once again. And that is currently over here at around about $20,000. And if we zoom in a little bit, we can see that there is Confluence at this point, because that's the previous all-time high at $20,000. The problem with this narrative is that in the previous two cycles, we had this big blow off top, which we haven't got here. or here. And this is what caught a lot of people out, including myself, that we were all waiting for a blow off top towards the $150, $200 to $300,000 mark. And that didn't happen. So that was the bad news. But the good news would probably be that because we didn't have a blow off top, then unlike the other two cycles where we had a fall in the bear market of around about 85 to 90%, it would appear that without that blow off top, it's more likely to mean that we won't have an 80 to 90% drop here, which again plays with the confluence around these levels, because the price down here would represent from the 69,000 high down to 20,000 would take it to around about 70%. So that would make sense that if we are in a bear market here for a whole year, and we have to say that that's definitely on the table because of the dominant trend we've been seeing since the top off at 69,000. Okay, so I'm going to show you the pie cycle, which I used to show you many times in the run up to the bull market that we had. And I showed many times that at the end of the first cycle, which was here in November 2013, the green line, which is the 111 daily moving average, and the red line, which is the 300 daily moving average, when they crossed over, they marked the end of a bull market. So we had one here at this point. On the second cycle, we had one here exactly at the 20,000. And then we had one here at the 64,000. And it appeared at the time that this was premature, that maybe, just like the first cycle, we're going to have two peaks and therefore two crosses. But the second cross here doesn't appear as though it's going to be coming. The lines are widening rather than narrowing. So the pie cycle again would suggest that the cycle for this 4-year cycle actually ended back in November 2021. So looking at those macro levels on the higher time frames, it would suggest that the current price that we've got, where we topped off at the 69,000 and we've had this dominant trend down, that would suggest that we're making these lower highs along the way, just like in a bear market. So unless we get above the 46,000, this is the lower high that we created on this dominant downtrend here. Unless we get above this level here, then each relief rally that we get along the way here is going to confirm the 1-year bear market trajectory all the way down to the levels down here, where the 200 weekly simple moving average is. So let's have a look at the current price action here. The fact that we've broken the critical $40,000 mark support here, we've been attempting to get back once, twice, 3 times, 4 times in the last few days. It's telling us that this is becoming a very strong resistant point now here. And to the downside, we had this fantastic candle here which showed us that this is going to be a very bullish move up here, which we got up to that $40,000 mark. And I tweeted this last week on Friday, I think it was, when we hit this candle here. I said there, you would ignore this candle, number 2 here, at your peril, because the number 2 candle has the same power to push the markets higher in the short term as candle 1, which is this is what happened after that same candle here. And I said there that expect a pullback to 36,300 before the next attempt at 46,000. Whether this comes or not, we don't know. That's why I put a question mark there. So what I was expecting was the strength of this wick here. Some people call this a spring, i.e. we go down to such low levels, but then a huge amount of buying comes up, which pushes the body of the candle much higher, creating this big wick here. And so the idea was that the strength of this would carry it to 40,000 and then beyond towards 46,000, and then see where we were going to get to. However, after this candle, we got this gravestone doji candle, which obviously is very bearish. And as I've mentioned many times in the past, when you get a bearish candle like this, there is an 80% probability to fall to the downside with 20% to the upside. The previous one we got here was this one here, and this one actually broke to the upside, so that 20% probability played out here. But currently, it's the 80% that's played out. And that was the reason why I said that expect a pullback to the 36,300 level. We came down to about 37 actually here. So we just have to decide where we're going to go with this candle. And currently, the daily candle is what we call a bullish harami candle. And if it closes like this, we can expect another attempt at the $40,000 mark here. But unfortunately, I expect it to be rejected. But if it does go above that, then there is a very, very strong probability to be rejected at the 46,000. So we'll see how that pans out, but that's what it's looking like in the short term. So it's all fascinating stuff. Okay, so we'll end it there. Thank you once again for watching. Hope you found some value in this video, and if you did, then please do remember to like and subscribe if you haven't already done so. And let me know in the comments below what you think of the end of the 4-year cycle, that instead of us being in an extended cycle, that the previous cycles ended and we're now in a 1-year bear market. So if you have any comments, questions or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.